tomorrow, because guess what? Regardless, guys, if it's a half day or not, we got one more chance to put the smackdown on the market and get busy and finish the week on a strong note. Okay, so with that being
What's
said,
up,
guys, do
everyone?
me a favor as you come on in here. Let me know where you from. Let me know if you're ready to make some money
Half
to
day
close the
tomorrow.
week, and then let me know if you ate good on today. Listen, man, I know holidays and all of that kind of stuff might have different connotations for people, but still, if you chose to chill by yourself, that's cool. If you got some family and friends, that's cool. If you don't
All right.
celebrate this holiday, that's cool too. But regardless of that, we get ready to get to the money around here, okay? Because we got one more day to put the smack down on the market. So if y'all ready to make some money tomorrow, please let Coach know down in the comments below, man. But as you guys come on in, I just want to say happy Thanksgiving to you and your family. And hopefully your day has been good so far. But we got one more day to get busy, even if it's a half day. So that's what I want to start with, guys. Listen to this. The market was closed today for Thanksgiving, but it's open a half day tomorrow. Okay, so if you're Eastern time, for example, we're gonna open at 9:30 and we're gonna close at 1. Okay, we got a half day. All right, so that means we got to be sharp. That means we got to be on point. That means we got to stick to our plan. Okay, if it ain't going how you want it to go, okay, boom, wash your hands of it, get up out of there, readjust, and get back to it. Okay, we not crying over spilt milk. We're not beating ourselves up over this. We're trying to learn.
All right.
But more importantly, we're trying to.
Very cool. Frog, 130 million revenue. 26% year-over-year revenue growth. 25% year-over-year revenue growth. Half of that is cloud revenue. They basically do DevOps. It's basically a DevOps, like, I don't know the word for it. It's not a binary. It's like a shell that has all the packages installed, basically, something like that. And then ASDS, 15 million revenue, and revenues and earnings per share came in below. So what's going on with ASDS? Okay. So ASDS is more about a bounce. 3 billion for liquidity and 1 billion in contracted revenue. ASDS is a space broadband network. Frog, 130 million, 20%. Cloud revenue is up 50% year over year. $5,000 customers. Okay. GitLab. DevOps, SaaS infrastructure. Okay. $130 million, up 20% year over year. Half of that is cloud. ASTS is $1 billion in contracted revenue and $3 billion. Frog is a recent earnings play. ASTS is a bounce play. So Frog is a U-turn. ASTS is a new one. Recent run. Okay. All seems pretty much good to go. If you got any comments, go ahead and drop those on the YouTube and I'll see those. Otherwise, we can get going. This one stock can change early buyers' lives. I'm not a financial advisor, but some financial advisors might say, based on this research, to buy as much as possible before December 1st. The company is ticker symbol FROG, Frog. They're a software company. They do DevOps. So basically the SaaS infrastructure, the cloud infrastructure that you can access through Amazon Web Services, Google Cloud. They're kind of like GitLab. GitHub is a developer. GitHub is like LinkedIn for developers, but it's also a place to store and have revisions of code, which you can imagine is pretty important as you're working with a team and going forward and backward in terms of changes and edits. You need to all be on the same page, literally web page or app page. Frog is like that. It's a new company. Well, it's not. It came out in 2021, but they have 130 million of revenue, up 25% year over year, and half of that is cloud revenue. So they're in the right category for right now, and they recently had earnings, and they're holding up super well. Now, I know not everyone is excited about software right now with all the attention going into the AI type companies. DevOps does use some AI for continuous monitoring, fraud detection, but in general, this is more of a boilerplate software company. So there's another company, ASTS. It's a space telecom provider. It's similar to think Starlink or think the SpaceX space. This company is also relatively young. These are the 2021 class of companies. And it's not doing excellent after earnings. It had a little bit of a bottoming, which is an opportunity to buy, in my opinion. I wouldn't generally say to buy a dip, but this is at a favorable spot, which I'll show in the chart. And they have over $1 billion in contracted revenue. So that's solid, even though their actual revenue that they booked is only in the tens of millions. So with that backlog in place and with about $1 billion or multiple billion of liquidity, this company has a runway. It has expected revenue, and it's in a space where literally, well, no pun intended, whatever, SpaceX has paved the way. So let's jump into these two tickers. I think they are very early, both of them. It's not financial advice, but I hope this helps. Here we go.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay, so let's talk about Frog here. It's 130 million in revenue, up 25% year over year. Half of that's cloud revenue, up 50% year over year. That's a big jump over the prior year, which would be the percentage of revenue that it accounts for. That increased. So this is good. This is what you want out of a software company. I mean, cloud was kind of the 2010s new thing, right? It was mobile first, and then it became cloud first, and now it's AI first. You might say the cloud thing was kind of going on through the whole past decade or so plus, but cloud is a buzzword, and now it's almost seems like a par for the course type of offering. I mean, even IBM is getting a lot of revenue through the cloud, even though they were known for on-prem. So this company, Frog, this is sort of paints the picture pretty clearly. 71 customers with over 1 million in annual recurring revenue. So they definitely have a lot of, I mean, it kind of gives away that they have a lot of small customers, right? Because it says they have 5,000 customers over here. So a lot of these, this is very much like a GitLab or a GitHub. Someone who's a developer is going to roast me in the comments for not differentiating more between GitHub and GitLab. But for our purposes, this is a DevOps solution for enterprise. So GitLab is the better analog. And they have these products you can use. I don't know if binaries is exactly what the word we want to use, but basically you can load their package or their shell or whatever, and they have a bunch of packages that come with that. So in business speak, it's kind of like having a pre-built house that you can just, start to build on top of, rather than just starting from scratch, which is a big deal when you're trying to build enterprise software. So that's what they do. Continuous updates is also very similar to, I'm going to say GitHub again, which is basically making revisions and changes without messing up everything you've done before and making sure you document it really well. So we're not going to get lost in the coding sauce here. This is the chart. And just as an investor, this thing has gone up since, 2023. Of course, 2022 was not a good year for all stocks. And this being a tech stock, a software stock, this thing came down a lot since 2021. So no surprises there. Most recently, we can see after earnings reactions, it kind of runs sideways for a lot. Of course, it depends on the earnings reaction. We don't have to read into this one too much. What we can say is here was the earnings, and it's holding up pretty well, considering if we look at QQQ over the past couple of weeks, just barely coming back to break even. The small cap space is doing a little bit better. Gold is doing well right now, but just the SPY or the NASDAQ or whatever you want to call it hasn't really done much. We're pretty much where we were a couple of weeks ago with a lot of hiccups. So this is not a bad earnings reaction, even though it looks like it hasn't gone anywhere. Well, it hasn't really gone anywhere in aggregate. But we have this close here on November 6th. So that is definitely a good spot to risk off of right here. $60 just about. And we're right near $60. So you risk $1, you try to make 10. That's the name of the game with Frog. And it's in a space where I don't think everyone's forgotten about software. It's just that there's less euphoria about it, which is fine. That's a good thing. User expansion is over 100%, aka they're not churning more than they're adding, so they're growing. That's good. They do have this loss, but that's kind of very common for software companies as they grow. And 130 million is a lot of revenue. So here's some similar tickers. GCT is one that is maybe the most similar just in the way that the chart is setting up. They're not exactly like GCT, but this is the peer that I mentioned, GitLab, which is probably the closest analog. But if we do look at GCT, here's GCT in a nutshell, but the chart really tells the story. So it is a software company, it is a cloud company, and it is enterprise. So it's a B2B company. It's sort of like an e-commerce, Alibaba, AliExpress, 3PL payments logistics service for e-commerce to basically manage all their different SKUs. So this is the chart, though. This is why it comes to mind. If we look at the chart right now, we can see there's recent activity, recent earnings, pretty similar to Frog, actually a much stronger earnings reaction than Frog in the past couple of weeks. So that's definitely interesting. Now, I'm not saying Frog's definitely going to do that. I'm just saying that they're both software names that reported earnings and went up recently. So people are definitely looking at both of them, and they're both mainly cloud companies. Frog recently entering that category. ASDS is the other company, and that's what the chart looks like. You can see from that chart that it's looking for a bounce. $1 billion in contracted revenue commitments. They are a space company, broadband network. So basically, there should be no connectivity gaps for people who have cell phones. And they're also bringing broadband to, democratizing it to everyone in the world, basically, who can access a cell phone. So Starlink is definitely a really good analog for this company, although they don't have much going on yet. Revenue of $15 million for the quarter. It's up year over year, like 15 times, but didn't beat expectation. They did report a loss, and $1 billion in contracted revenue commitments, $3 billion in liquidity. So there are some challenges. This would be great if we could hear something about government contracts for this company. That would be very reassuring for the stock price, considering they just have that 15 million of revenue otherwise. They're guiding high for through the end of this year, and we're continuing to look for launches and any sort of network successes. So there's some risks. The actual earnings wasn't great, but if we can get some more news out that can be positive, product updates, government contracts, etc., this is good for this company. Rocket Lab is definitely in the conversation as well. Lunar as well. And Rocket Lab you can't really buy right now. Rocket Lab looks like trash, in my opinion. I mean, ASTS looks similar, but at the very least, there's sort of a left side peak for ASTS here. That is probably the realist, most reasonable level, 55 to buy it off of. Rocket Lab, I guess you could say there is something, over here you're buying off of, but there's no peak. So you're just looking for this other low, and then you're buying it off a moving average, which I don't love that. Not to mention this earnings reaction was really rough. I mean, ASTS wasn't great either, but at least you do have this level right here that it's getting above. This level sort of will be interesting as well. So big move up, 170% down, whatever the same is. Rocket Lab a little bit less euphoric, up 50%, down some. This is just a choppy stock to trade in general. And one other stock that is in the same conversation is Lunar, which has had big moves based on launches. Right now, it's pretty much not in the conversation at all based on how it's moving. And the SpaceX holding company also is not interesting, DXYZ. So ASDS is definitely kind of in its league of its own right now. And there's not a lot of volume, but there's enough liquidity that it's definitely worth looking at. And it actually has kind of a similar look to stocks like Wolf, which were speculation names, Bitcoin miners turned data center names that went up recently and came back and then had a bounce. Okay. Cypher as well. And then Iron also, which I'll mention, but looking for that bounce as well. So some of these names, quantum names, you just really ought to abandon. Same with rare earth names. They're kind of out of the conversation right now. But ASDS does have those levels where it's starting to get interesting again, and it hasn't had 4 green days in a row to totally make it unbuyable. So sort of an opportunity to jump in without, it being overbought. And it's also not really a falling knife because it sort of is creeping up the last few days. So we don't have to be wedded to this company. VSAT is another one I didn't mention that's in the conversation for sure. Satellite companies, broadband. This is kind of ugly. It did have 3 green days in a row. It's not really as opportunistic as ASTS in my opinion, but they all do look relatively similar. So I think this is definitely the play right now. Risk a dollar, look for 10. And if you're more looking for something that has recent earnings that were solid, Frog is the one for you. But if you're not super excited about investing in a software company right now, I don't blame you. If you look at ServiceNow or Salesforce, they're both not doing so hot. So those are the ideas. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I release that in the YouTube post section for subscribers once a month. And if you want to try out that $19 Cyber Monday deal at stockscommunity.com, give that a shot. Check out those testimonials and see if that's for you. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay. What else has Chris Saint got for us?
You're 1% better each day. Now listen to this. Because we got a half day tomorrow, I want you guys to know this for tomorrow, but I want you to know this for 2026 too. The day leading up to Thanksgiving, the market always go up. Okay, I told you guys this at the beginning of the year. They want you guys to be feeling good when you're sitting around on Thanksgiving, eating with
I
friends
believe
and
that is
family.
true.
So you need to always know the Wednesday before Thanksgiving, the market goes up. Okay, then the market closes on Thursday every year for Thanksgiving. Okay, this is tried and true. And then Friday, guess what? The market go up again. Okay, the market go up on Friday. The market goes up on a half day. So I need you to know that. Okay, lock in on this. Write this down for me. Write this down if you get a chance. Watch this 2 times. Matter of fact, share this with somebody that you know need to be in the market for next year, because we don't want people to miss these opportunities to change their situation. Okay, so listen to this. The day leading up to Thanksgiving, meaning the Wednesday, every Wednesday, the market is going to go up. It's going to finish the day up, and it closes on Friday, and then on Thursday, and then Friday it's going to be up. So listen, that don't mean it's
Okay. There's got to be some big public companies similar to Albemarle. Materials company. Lithium-ion battery company, EOS. SQM, yeah, there's one. I don't know about all these other ones. Iron's got that Google connection, or a 5-year deal with Microsoft. Preferred partner of NVIDIA. 5-year, $10 billion contract with Microsoft. Okay. This is in the same conversation as Lithium America. And broader chemicals company. Okay. Over $1 billion in sales. So a blend of lithium specialist company. Chemicals company, bromine, lithium. Battery materials. Okay. 10 billion 5-year contract with Microsoft, the preferred partner of NVIDIA. Buy every share of this stock you can. I'm not a financial advisor, but some financial advisors might say it's a good idea to buy as much as possible of this stock before December 1st. The company is IREN, ticker symbol IREN. They have a $10 billion 5-year deal with Microsoft. They were a Bitcoin miner. They transitioned to a data center compute provider for the hyperscalers. Think Microsoft, Amazon, Google. And they are down significantly right now. That's where they're at. But they look to be bouncing, and a lot of speculation names came down. And so it seems to offer a good risk reward. They are a preferred partner of NVIDIA. And in the same way that their sister company, Wolf, ticker symbol WULF, had a significant bounce recently, 4 green days in a row, I think IREN could have a bounce like that as well, which we'll look at the chart, but 4 green days in a row is no joke when these companies are so low priced. So that's IREN. And then the other company that could be interesting to you as well is Albemarle, ticker symbol ALB. They do battery materials. So they're a lithium company, which lithium is used for lithium ion batteries, but they also have other chemicals as well that go into batteries that they produce. So you can bet on this company without betting specifically on, say, Lithium America, because although Lithium America has done well in the past, it's had its down moves as well. So this is a more broad-based energy storage, lithium-ion battery, etc. play. It's a chemicals company, and they have over $1 billion in revenue. So this is very different than IREN. But both of them, I think, are at very favorable spots, and definitely in the eye of the storm for batteries, energy storage, data centers, compute provision at this moment. So this isn't financial advice, but I hope this helps.
This is Sam Putnam.
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 Okay, so here's IREN. 140 million is up from the previous quarter. Revenue from Bitcoin is up 24% year over year. But what they're really trying to move into is AI cloud services. Revenue grew to 3 million from a little under 3 million in Q2. So it's not a lot. It's actually a tiny amount. But it's a step in the right direction. And they do have that NVIDIA preferred partnership, which gets them access to NVIDIA GPUs. I think NVIDIA has a number of preferred partners, but that $10 billion contract with Microsoft over the next 5 years is a big deal. And that sort of separates them a little bit from their competition. So that's the next steps, this minor AI infrastructure cloud firm combo. And if they can just make that transition in its entirety, they're really going to have strong prospects. So that 3 million AI cloud business is not really much right now, but they're definitely headed in the right direction. And here are their peers that people talk about. So we'll look at that in a moment right after we take a look at the chart. So this is the chart. It's down significantly after earnings. It's no big deal. The market as a whole came down after earnings. So although this earnings reaction looks bad, I mean, it's almost halved from 80 to 40. Keep in mind, this company also went from, what is this, $5 to 80, 1,200% since the April lows. So they're up a lot. And this is this bounce that is possible. This is this bounce that came in Wolf. in the last 4 days, it's significant. And Iron could have something similar. 1, 2, 3, 4. This is kind of a red day actually, but still 30%. I mean, on a ticker that trades 40 million times over $10, 400 million a day, you can definitely put 400,000 in there and barely move the spread at all. So I think Cipher is in this conversation. Cipher, ticker is CIFR, and Iron as well. But Iron hasn't had a bounce yet, so that's the opportunity that is showing up right now. These other companies, Mara and Riot, don't appear to be going up really, or having a chance at that. I mean, this is really slow, continued selling. Sure, Riot had a bounce, but they're also just very choppy over a long period of time. These are kind of the original Bitcoin miners. I mean, this over the last 3 years, they've really not been interesting at all. To, compare that to CIFR, Wolf, or Iron, and you kind of see how exciting this move into data centers from simply Bitcoin miners is for the price of the stock. So that's the comparison. CleanSpark, I believe, had a 100% miss on its recent earnings. So, it had a positive reaction, but I don't think these earnings were good. So you have to kind of take some of these companies with a grain of salt. Hut looks okay. BitF and BitDR are sort of similar, but I mean, this earnings reaction is very worrisome. BitF, Bitfarms, maybe you'll get something worth buying over this level, but it's a $3 stock, and HUD is going to take a little time, I think, to get a little less choppy. So I do think that the best one right now is Iron, and that Microsoft partnership is no joke. So here's the deal. They are all sort of trying to do the same thing. But Iron has this contract and the others don't. I mean, this is not something Microsoft just throws around. This came in November, which is where we're at. But you can see the stock price hasn't performed great in November. But at the same time, this is a long-term deal. So a lot of this is happening in Texas, in the South, maybe in Alberta as well. They have this $6 billion agreement to get GPUs and equipment from Dell. So they've also secured some power to make that happen, which is going to be the biggest unknown for actually making a lot of this compute happen. And I think that Microsoft deal may have helped them get that power. It certainly helps to have some credibility. And crypto has done horrible. I mean, recently, it's not really just about transitioning to AI. It's also, sure, Bitcoin had a bounce recently, but we went as low as, 85,000 that we went as low as? Almost 80,000. So you have to kind of be careful here. Ethereum isn't doing great either. Obviously, they track each other. And ever since this liquidation names, these names have just drifted down. So there's going to be a lot of other companies that bridge the gap on the way to data centers, compute, this open AI vision. Natural gas is going to be leading the way. So some of these natural gas providers, some of these energy providers, NextEra is going to be in the conversation as well with battery storage. But until we get there, I mean, you can look, Oklo has come down significantly. We have to get not only what's going to be needed, but also the timing on when that's going to be needed. And right now, it's pretty clear that it's not time for nuclear yet. So we don't have to worry about buying nuclear, buying Oklo. These other nuclear companies aren't doing well either. And I mean, also in this conversation of getting the timing right, quantum is not even close to being right, being ready. So these quantum companies haven't done anything really at all in the past 2 months. So we're just trying to pick the right sector. And I think iron, it's one of these speculation names that is sold off, this AI data center compute sector, that also has a prayer at being relevant in the near term over the next 12 months. So could definitely see a move up similar to WULF for iron. Now, the other ticker is Albemarle, and this is the recent earnings, over $1 billion in revenue. You can see that the earnings per share was better, still a net loss, but better than expected. And it looks like we could get some tightening and a breakout here. These are a couple tight days. You can see that pretty clearly over the last 30 days. This looks pretty, right? It's just sort of giving a really clear tight risk reward where maybe you risk literally $1 and look for a move of $10 or more to the upside. So it's gone on a crazy run. This run after earnings is 45% just since the beginning of this month. But it's at an important spot right now. So if it can get another 20%, 15%, I think that's pretty possible for this company. It's not something you want to just sit in for the next 3 months because it could definitely retrace, but that's ALB. So they do lithium batteries, not just pure lithium. So you can be a little bit careful rather than just piling into Lithium America, which people have talked about doing and have talked about doing that in 2021. Of course, like all the software companies, this company, was higher back then than it was now. It had a resurgence in late 2021 and then really dumped after 2023 onward. Lithium in the US is very important. It's in the same rare earths conversation. But right now, you don't really need rare earths if these conversations with China go well. You could see this was the 1010 Trump Xi talk about rare earths, how China's going to limit the export of rare earths. So this thing skyrocketed even more. And then it just sold off after it was revealed that, it was basically a miscommunication. And Lithium America sold off as well. So these are kind of all in that bucket. ALB notably did not sell off. It just kept chugging along. So it's sort of a diversified play on lithium and other battery materials. And it's a $10 billion company. So it's a chemicals company. It's not just a lithium mine. So that's why it's so strong. $1 billion in revenue is up a tiny bit. They did have a net loss, but more free cash flow. So a little more flexibility there. And as long as they can continue to hang around and be the go-to energy storage chemical supplier to help build out these batteries for smoothing out the power created by wind and solar to provide power for data centers, then they're definitely going to do well. And again, as we saw with Lithium America, I mean, this is sort of a boom and bust company so far because these data centers and these electric cars haven't reached mass scale. But this company seems to be holding. It is sensitive to commodity prices, but based on the chart, it doesn't look that sensitive. I mean, over a 5-year chart, maybe, yeah, it's down significantly. But all we really have to worry about, right, is how sensitive is it to market movements, to tariff comments. It's definitely followed the market down and then back up. And is there a story here that can make it hold up even as the market goes down? So relative strength. And there is, and that story is chemicals. So it's not a 5-year hold or anything like that, but this is definitely the play if you do believe in buying it for a month or so. Well, not that you want to buy it with the intention of holding it for some duration, but if you want to look for a move up 10%, sell a piece, and then hold the rest with a trailing moving average. Electrification, battery demand, and lithium are the reasons to buy this. So here's some similar tickers. The one that is actually most connected is Lithium America, that's on the NASDAQ and NYSE. this SQM has been mentioned before, but it's in South America, and anything that is a little less of a pure play is more stable in, I mean, we can literally see it in the chart. That's not really a question. So that's the idea, ALB. And we can take a look at Lithium America. But right now it's not doing well. It's just selling off with the rare earths company. So that's pretty much where we're at. EOSE is one other company to take a look at for battery storage. It's in the power generation space. It looks like this. Recently sold off, sort of bottoming. And if that can make a move up, that could definitely have a tug effect on ALB. Although EOSE is much smaller. So that's the idea. ALB along with iron is the main idea. And they're both sort of depressed right now as the market has sold off in the last couple of weeks and just recently had a rebound. There's tons of stocks that are depressed, but there's also tons of stocks that already had that rebound. WULF being an example. And a lot of these pharmaceutical stocks and the PPH went up significantly. So you can't really, there's some stocks setting up. TVTX looks great, but you're risking a QURE or an NTRA type, NTRA is actually doing well, but NTLA type move down. So for that reason, I think it's best to stay away from biotech right now. Stay away from data center stocks that already went up, that already bounced. And, you can't buy NVIDIA right now, in my opinion. It looks choppy. You can't buy Meta right now. It's bouncing, but you don't want to buy a bounce, and it's unclear if it's going to recover this tax hit anytime soon. Amazon looks so-so. Already had a bit of its bounce, and Google's up significantly. So, by process of elimination, you end up heading to basically industrial stocks, and you end up looking at sort of lithium stocks and chemical stocks and any sort of sector that has a little bit of life in it. And I think iron is a play there. ALB has the revenue, $1 billion revenue, if you're looking for something a little more stable. So those are the two ideas. You can see iron moves about twice as fast. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want to try out our 7-day trial of stockscommunity.com, you can head over to stockscommunity.com, the first link in the description. You'll see some testimonials over there. And you can drop into a little Q&A screen share and take a look at your portfolio, see if we can help you out. See you in the next one.
This is Sam Putnam.
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 Okay.
It's going to go up the whole day. It could be down to start the day, but it's going to finish up. Does that make sense? It could be down to start the day, but it's going to finish up. Speaking of finishing up, yesterday I talked to you guys about, I want you to treat the stock market like a professional game, like a professional football or basketball game. And I'm using those two sports because they have 4 quarters. And the market typically likes to operate in 4-quarter fashion. For example, okay, if the market is down the first hour of the day, that means the first quarter might just be going down. But the second quarter started at 10:30. And from 10:30 to 11:30, the market could be going up. That's one reason I always tell you guys, man, coach is always on you guys about, hey, make sure that you sometimes wait the first 30 minutes to let the dust settle, because you can miss all the gyration, and then you can get in right when the market is ready to go up for the remainder of the day and not have to be down or stressing or any of that kind of stuff. Okay, so
Okay. If you got any questions, comments, drop those in the chat. Otherwise, let's finish off strong here. American Electric Power Looks interesting. 6 billion of revenue, up 10% year over year. And Coherent, 1 billion, is up 24% year over year. Lasers for optical connections. $6 billion, up 10%. And $1 billion, up 25%. American Electric Power Company. There is one stock that is about to skyrocket. The company is American Electric Power Company, ticker symbol AEP. It's $6 billion of revenue, up 10% year over year. And power is basically the one unsolved part of the data center hyperscaler AI equation. This company is there to provide it. If power companies are not something you want to bet on, well, you can bet even more closely to the AI narrative and bet on a company called COHR, Coherent. This company is also interesting, and they do optical connections. Their revenue is up 25% year over year. So they definitely have a growth story. They're in a sector with a lot of other companies that have done well. Lumentum, Applied Optoelectronics. So their laser technology is definitely needed to have high bandwidth, transfer a lot of information between NVIDIA GPUs, and basically provide all the networking that needs to actually happen to transfer all this information quickly and get an answer to you on your ChatGPT very fast. So those are the two companies, in a power company and optoelectronics, a laser company, that I think are very interesting based on the charts right now. If you like these ideas, hit that like button. Let's jump into a little breakdown.
This is Sam Putnam.
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 Okay, so here's American Electric Power Company, $60 billion company, and they do generation and marketing. So marketing is the how they basically divide up the power and sell it to different parts of the grid. So coal, natural gas, nuclear, hydro, solar, other energy sources, they got it all. And you don't have to bet on, hey, I'm going to buy this nuclear power company at a time when Oklo, the Sam Altman SPAC, is down significantly, and NNE, SMR, the small nuclear reactor stocks, are down. You don't have to guess the bottom. You don't have to buy some natural gas stock and just hold on for dear life. You don't have to buy a coal company. There are some coal companies that are doing well. I believe Hexcel might be one. Don't quote me on that one. American Electric Power is a way to bet on it all, a public utility, because we know there's going to need more power for these data centers. Customers are already complaining about power prices going up. Of course, the backlash to that is being met with, okay, well, we'll just pass the cost on over to Meta, to Amazon, to Google. They'll just pay more, and customers' prices are not going to go up. Of course, the more AI has a positive public perception, the more likely all this build out is going to happen. The government's been given the green light. They are giving the green light through that Stargate $500 billion contract project. Government's not adding any money. SoftBank is putting money into it, but government is saying we're going to make all this permitting happening for all of these power companies to basically allow OpenAI and its competitors to use all this compute and have enough power to actually not be rate limited, which I'm sure you've experienced if you use ChatGPT or these other LLM companies. And these are only the public facing ones. There's a lot of enterprise related AI companies as well. So American Electric Power, it sounds old and like, classic, but it's increasingly connected to large data center operators, cloud tech firms. And we can talk about that in just a second. First of all, here's the actual earnings, which is up 10%, $6 billion. And compared with a year ago, the earnings per share is down a little bit. Revenue growth is strong. So here's what the chart actually looks like and why it's interesting. You can see on a 3-year chart, we've pretty much just gone up. Okay, so that's good, but you still have to look for an entry that's low risk. And whenever you see, what is basically a flag, it might mean nothing, but some of the time it means we're definitely going to see a move up. And there have been, a handful of companies that have basically followed that trajectory. Not all of them, but look at this move. I mean, some of these biotech companies are just prime examples of, sure, anybody can see this, anybody can draw it, and that's a good thing. The more people can see it, the more likely it's self-fulfilling and actually happens. That is, when it's a real company. So these biotech companies, these are big companies. You can see they're not crazy big, but this is at least 30 million in revenue, 30 million in dollar volume per day. Arcus is a little bit more than that. And not every company that forms out a flag does break out. We'll see if IMAX actually moves up or just channels as an example. Some of them definitely fail. Here's an example of one that is doing well. But if we look at MedP, went sideways, built a base, and then sort of failed. So maybe it'll build out more. But the name of that game is, you buy in one of these tight days, you sell out some on a move. Well, 3% move, you probably wouldn't sell out any. You'd probably just stop out at some point on this one or just hold it to your average. But you only have to be right 3 out of 10 times and make a lot more on those 3 wins than those 7 losses. And AEP right now is providing a really low risk entry opportunity where you can risk really $1 and look for $10 or more to the upside. And on a 30-day, you can pretty clearly say, you know what, this line right now is definitely interesting, where it tested here and then tested over here. So somewhere around 121.5, maybe today's open. You could even just use that and say, right here is where I'm going to risk. And then say, $10 up is kind of what you're looking for a move, which is a little less than 10% because we're a little bit more than $100 stock, but it only moves 2% a day. So you really aren't expecting a 10% move in, any less than 5 days. And you don't necessarily look for a 5-day spurt. You really only expect 3-4 day spurts. You see in Wolf 1, 2, 3 days in a row. And sometimes you see moves up, this is really only 2 days and you already get a pullback in a stock like Reddit. So not all stocks move the same, but you do want to be a little bit cognizant of keeping your expectations in check. This run only happened really because September was such a crazy run. I mean, it went on throughout after September. But you can see this is 10-10 when the market came down and AEP was strong relative to the market, but that sort of killed its momentum. So that's American Electric Power. This is the recent earnings. And this is actually a pretty solid earnings reaction considering other earnings reactions this quarter, where a lot of them have been dragged down by the market. And the market has, you can see in the background, not done so hot. It's reached that high right after Trump met Xi in South Korea. And even though they all sort of talked hunky-dory, the market still came down significantly after that. So only recently getting this bounce, which has been a crazy bounce. But the great thing about AEP is it hasn't participated in this bounce, because if it had, it would be overbought. So that's a lot about that chart, but the chart really tells the story about where buyers and sellers are actually, their revealed preferences. So double-digit year-over-year growth and beat, which is solid. They have growth plans. They definitely are positioning for data centers and higher power loads. 5-year capex plan of 70 billion, which is crazy, but it's actually more than their market cap. So we'll see what actually happens out of that. They're projecting about up to 10% ish operating earnings, and they expect to have 10% more customers, basically, that they're serving every single year. That's compounded annually. So that's the plan. This is the real unknown, is how much of this power is actually going to get approved. That was sort of the government's whole role. They do have that sort of backdoor to the White House. That is, Silicon Valley does have it through, some of their appointments. And, you literally see pictures of all the big tech lords eating dinner with the administration. I mean, they're not eating dinner for no reason. But it still has to happen, and customers have to think that AI is good for them, which definitely middle America, at least, is not seeing the benefits of AI and doesn't love it, as far as I can see. So they're a regulated utility. They do need rate increases approved by state regulators. So they need the public to embrace more power. Hopefully that lowers the public's prices if they can have some sort of narrative like that. They'll definitely be in the right in the public's eyes, which will actually make this happen. So they do have this subsidiary, Indiana Michigan Power, which has a deal with Amazon Web Services, Microsoft, and Google. So they do have explicit deals. And this is a deal with Blue Energy. This company has their fingers in basically all of the most exciting companies at the moment. Bloom Energy is that mobile power company that can connect directly to provide power to a data center, sort of redirect natural gas and generate power on site within a few months or less. I think XAI utilized Bloom Energy to make that happen. They're massive, colossal data centers. So this is their plan, $70 billion. It's really trying to be a cloud provider backbone, a data center a backbone. And we can look at these other companies. This is a sleepy company, Dominion, that ticker symbol D, ticker symbol Southern Company, is also sleepy. It's slow moving. Excel Energy may be a little bit more related. But I think AEP is definitely the most interesting chart-wise. So that's the idea for power. This is Excel Energy, XEL, and we can take a look, but it's good. It's just it's been building out this base for a while. If you want to sit in this for another month, you can, but probably makes more sense to look at AEP, in my opinion. Next Era is even moving more than Excel. So there's other companies that are interesting in power, but you start getting into energy companies, oil companies, then you have to start looking at the price of oil. And I just think this is a cleaner play. Next Era as well, I've been talking about a lot because they have that connection to Florida Power and Light, which is a real innovator in energy storage, load balancing, which is a way to make data centers happen. So Coherent is the other idea here. Recent earnings holding up from there, big beat, and it looks strong. Its peers don't look great. I mean, AAOI has been choppy this whole run up. It's been really difficult to get positioned, and don't really love it here. Lumentum, maybe you could take a sort of dip buy, sort of a Meta type dip buy idea, but you try to buy the dip on Meta, it's just a falling knife again and again. So I think Lumentum is really the only type of dip buy that looks reasonable. LITE actually is Lumentum. I'm talking about Lumen here. LIT already broke through that $300 level, so probably not worth looking at. It needs to cool off for a little bit. And I do think Coherent is at a really reasonable level where it's shaping up, sort of a flag, and hasn't gone yet impressively the last 3 days, even as the rest of the market has jumped up significantly. So I think it's in a good spot. And if we look at basically what they're up to, well, $1.5 billion, up 25% year over year, record revenue for Coherent, and margins are improving. So this is the strength from data center and networking demand. Super solid. There are some headwinds. We'll see. I mean, we know lasers are needed, optoelectronics are needed, but maybe this is sort of the old school version of lasers that are components that are not actually going to be part of this networking AI portion of their business. This is what they do. They are a provider of lasers and laser-based technology for scientific, commercial, and industrial. So maybe the scientific part is pretty much getting phased out as far as their core focus, and they're just transitioning all in to this AI data center build out. These are the big companies that they are, connected to, NVIDIA being the major one. That's pretty much all you need to know. But they are using lasers for that combination with NVIDIA. So that's a little reassuring considering that's their bread and butter. They're not just scrapping that. And they've provided optoelectronics networking for data center operators in the past. So this isn't a completely new development. They also spun off part of their business for lasers for defense for $400 million. So lasers is really an all-encompassing just chip component that is good for all type of electrical applications. It just so happens that it does help with basically sending information, I believe, at the speed of light across GPUs. And these are the companies in the conversation. We already took a look at Lumentum. They also do optoelectronics lasers. It's pretty much very similar. And right now, instead of digging into deeply on a scientific level which one does what, I'm doing what a lot of investors, I think, are doing, which is say data center optics are definitely required. And the movement of these stocks shows that. And right now, Lumentum Light already went. So you got to look at the one that hasn't gone, that isn't choppy, and that, hey, maybe you can get a dip buy, but it's not necessarily going to go up. So that is the argument for Coherent. A little play on words, coherent, light, optics, physics, whatever. I don't know. So COHR is the ticker, and I think it's pretty interesting, as well as American Electric Power, if you're more interested in exposure to a utility, if that's okay with you, given the regulations that might come with that on the state level. So those are the ideas. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want to try out our Cyber Monday deal for $19, head over to stockscommunity.com. Give that a try. You'll see some great testimonials there. And I'll see you in the Discord.
This is Sam Putnam.
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 This is Sam Putnam.